I've been through 3 massive bear markets in 10 years, and I gotta admit, in the first few of those, I was really sweating it. I was like, I don't know if blockchain's gonna work. Maybe the government's gonna outlaw it. Maybe something really bad happens. This cycle is totally different.
Major hedge fund Pantera Capital, with assets over $4.2 billion, along with their CEO Dan Morehead, just made a public statement that the Bitcoin halving happening next year in 2024 can take the Bitcoin price to over $148,000 by July 2025. This was in their public newsletter. They backed their projection up with data. And while the Fed's annual Jackson Hole Symposium is happening now, be ready. How can Pantera justify, to me, this insane price prediction? Number 1, the Bitcoin price has been suppressed long enough. We've actually been through the longest period of negative year-over-year returns ever, lasting 15 months from around February of 2022 to June of 2023. Bitcoin has never been this suppressed. The longest period prior was just under a year, from the end of 2014 to October of 2015. So this period right here, of course, we know what Bitcoin did after. And now Pantera is publicly on record. Our view is that we've seen enough. There's just so long markets can be down. We believe the combination of recent positive events, the XRP ruling, the endorsements by BlackRock, in addition to the Bitcoin halving, provide a strong setup for the next bull market for digital assets. So Pantera is saying that Bitcoin has strong product market fit, has strong fundamentals, and then of course the Bitcoin halving, which is near the exact opposite of what traditional markets are used to. The money supply function of the Bitcoin protocol is the polar opposite of quantitative easing. Today, 6.25 Bitcoins are issued every 10 minutes, and unlike traditional markets, there's no Greenspan put if a politically powered group like homeowners or people who own equities is suffering. It's just 6.25 BTC every 10 minutes, and no entity on Earth can change that. Every 4 years, the block reward is cut in half. This process repeats until the year 2140. And next year's halving, as outlined by Pantera, will be big. The next halving is projected to occur on April 20th, 2024. The block reward for Bitcoin will get cut in half again. And if demand for new Bitcoins just stays constant, and the supply of new Bitcoins is then cut in half, this will force the price up. But Austin, if everybody knows this is about to occur, then isn't it already priced in? Well, this is also known as the efficient markets theory, which says, if we all know it's going to happen, then it has to be priced in. Well, in response to that, and referencing famed investor Warren Buffett, the markets are almost always efficient. But the difference between almost and always is 80 billion to me. Thus, Pantera states for the record, even if we think everybody knows something, it doesn't mean there isn't a ton of money to be made. So next year's halving is not priced in, says Pantera. And then based historically where Bitcoin is bottomed, Pantera has a guess on where Bitcoin could top. Bitcoin has historically bottomed 477 days prior to the halving, then climbed leading into it, and then exploded afterwards. If history were to repeat itself, the price of Bitcoin should have bottomed around December 30th, 2022. Now that didn't happen. As of today, the actual low for Bitcoin occurred on November 9th, 2022, amidst the FTX collapse a month and a bit earlier. That means things have been sped up. That means the current price of Bitcoin is actually outpacing Pantera's projection. They were thinking BTC would be around 3,500 at the halving date, while we saw around a 679% increase from the last halving after 2020. They're expecting a 317% increase in 2024 into 25, and that would take us to almost a $150,000 Bitcoin. Now, of course, this is Pantera's projection long-term, but short-term, Jerome Powell, the Fed, may have other plans. Jerome Powell set to deliver his annual Jackson Hole speech that tanked stocks last year.
Tomorrow, Fed Chair Jerome Powell is scheduled to speak at the Kansas Fed's annual Jackson Hole gathering, Kansas City Fed's. In last year's speech, which lasted only 8 minutes, he was clear in his warning that the central bank would continue its rapid rate hike campaign to combat inflation. which back then was clocking in at around 9%.
So Powell will take the stage Friday at 10:05 a.m. Eastern Time as part of the 3-day gathering in Jackson Hole, Wyoming. At the same gathering last August, Powell famously warned the U.S. may need to enter a lengthy period of very restrictive monetary policy that will bring some pain. So last year, he warned the market. The S&P 500 fell more than 3% the day of Powell's 2022 speech, and then crashed 13% a month after Jackson Hole. And thus, today, with the monetary policy already so aggressive, yet with inflation still sticky, what should we expect from Jerome?
I think it's going to be completely different. Last year, inflation was rising. They had pivoted from saying it was transitory to being the number one priority. He ripped up the usual speech, made it much shorter, and said the same thing 8 times. Inflation is our priority. This year, he doesn't need to do that because they have made inflation the priority. They've raised rates really rapidly. Inflation has come down. And so I think we're going to pivot back to a more standard speech where they'll be talking about the prospects for the labor market, the prospects for inflation. He's already talked about how things are a little bit more balanced. They're getting close to being balanced. And so I think he's going to leave open the possibility of more increases, but it's going to be a very different speech than last year.
I think the Fed, and I think what Powell's going to say tomorrow is, we're in a place we can hang out and watch for a while. I don't think he has to lay down a major landmark policy speech as he did last year, because I think the outlook is much more uncertain as to what the Fed needs to do.
The minute I get results from this, I will make a video. I will keep you updated. But just understand, even if the Fed says the US dollar is strong, when in doubt, zoom out and think about the purchasing power today of the dollar compared to where we used to be.
I heard a new term on TikTok today that made me stop in my tracks.
We are living in the silent depression.
This guy believes we are not just living in worse than the Great Depression, we're living in the silent depression. The average annual income in 1930 for an American individual was a little over $4,800. Sounds like nothing, but if you adjust that for inflation, a little over $4,800 a year in 1930 is equivalent to almost $85,000 annually for the average salary for one person. Right now, the average annual salary is $56,000 a year. We currently are making less than the height of the Great Depression. In 1930, gas was on average 10 cents a gallon. That would be about $1.73. In case you haven't filled up your car lately, average cost of a gallon of gas is $3.55. And of course, the most coveted aspect of the American dream, being able to buy a house in 1930 cost about $3,900, less than $70,000. I spend way too much time on Zillow, so maybe this isn't surprising to me, but the average price of a home in America today is $416,000.
So how this affects you as a crypto holder, long-term post-halving, Bitcoin is looking super bullish fundamentally because of the Fed and because of macro. Anything is possible in the short term, especially if the Fed pushes till something breaks. Bitcoin will crash like the stock market did in 2030, Bloomberg analyst predicts, and he does back this with data. One of the best performing assets in history and a leading indicator, Bitcoin, appears similar to the stock market in 1930. So back in 1930, statistician and entrepreneur Roger Babson began warning about elevated equity prices well before economist Irving Fisher proclaimed a permanently high plateau in 1929. The Fed tilts our bias towards a stance similar to Babson's today for Bitcoin. So he's essentially saying, don't fight the Fed. And in this above chart, it goes from 1920 to 1931, with the white line being the Dow Jones 100-week moving average, so the stock market, with the yellow line being the Fed interest rate back in the 1920s. And then, of course, we see after the Fed had stopped hiking, they actually already started pivoting. They pushed markets till they broke, and the Dow Jones obviously went into a severe correction. Bloomberg is saying that's very similar to what we're seeing with Bitcoin. The white line is Bitcoin's 100-week moving average, with the yellow obviously being the US federal funds rate. The 100-week moving average for Bitcoin has already turned, with many people projecting one more hike possible, and then we pivot with the Fed. So while I am bullish long-term, anything is possible short-term, and I will push back a little that it's sort of an unfair comparison for Bitcoin versus traditional markets. Because although I don't totally disagree, last time I checked, the Dow Jones does not cut its new supply in half every 4 years. In fact, quite the opposite is true. Boom times equal increased new issuance. If you'll be in Amsterdam in October, be sure to join us at Bitcoin Amsterdam Conference. Use code ALTCOINDAILY for 10% off your ticket. Link down below. See you tomorrow. Like always.